Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss franc. Today's date is June 14, 2024. Let's get started. Looking at the dollar versus Swiss franc, it is lower today and in the process is moving back toward the 200-day moving average. That level comes in at 0.8896. Earlier this week, the price fell below that level. This is on the CPI day, but could not sustain momentum. The market rotated back to the upside. Trading last week, we also moved below the levels here and here, but each of those breaks below the 200-day moving average also failed. I guess we can count it. It's three separate breaks below the 200-day moving average. If you take a look at the chunks of the data through here. So that's 1, 2, 3, 4 different times the price fell below the 200-day moving average, and price is moving back down toward that level at 0.88968. Now, if we take a look at the trading week, and where we've been and what happened this week, the high price that we did see on Tuesday came up and extended above the 38.2% retracement of this move to the downside. That should have sent the price higher. I always like to get above the 38.2% retracement and stay above to show that the buyers mean business. But as you can see, it was short-lived, and this high right here, this corrective high after the first initial move lower, could not get near that level and started its rotation to the downside, helped by the CPI data, which puts the price lower. The subsequent move back to the upside right through here did get above this cluster of moving averages, including the 200-hour moving average. Finally, after the break above here, the 100-day moving average, that's this blue line right here, and then the 100-hour moving average. So the buyers, again, like up here, had their shot to take the price higher, but each of those times above the 100-hour moving average, above this cluster of moving averages, failed, and the price ultimately fell back below the 100-day moving average and stay below that level with price action above and below the 200-hour moving average both yesterday and today until the price moved lower in trading here today. So sellers are more in control. We do have this key 200-day moving average ahead. We do have the low prices that we saw recently in the month of June to get to and through. But below the 200-hour moving average, below the 100-hour moving average, below the 100-day moving average, all points to the downside from a technical perspective still for this currency pair. Stay below those levels keeps the sellers more in control. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.